Gold is making headlines again. Prices are climbing toward record highs. Investors are rushing to buy, and financial markets around the world are asking the same question. Why is everyone suddenly buying gold? Is this the beginning of another historic rally, or is something much bigger happening behind the scenes? Let's break it down. Gold has always been known as a safe haven asset. Whenever the world faces uncertainty, whether it's war, inflation, economic slowdowns, or financial instability, many investors move their money into gold. Unlike stocks, which can fluctuate dramatically, gold has historically been viewed as a store of value during uncertain times. This time, several factors are pushing prices higher at once. One of the biggest reasons is growing geopolitical tension. Conflicts in different parts of the world, trade disputes between major economies, and uncertainty in global politics have made investors nervous. Whenever uncertainty increases, demand for gold usually follows. But that's only part of the story. Another major factor is central banks. Over the past few years, many countries have been increasing their gold reserves. Instead of relying entirely on foreign currencies, central banks are buying more gold to strengthen their financial security. This steady demand has added significant support to gold prices. Inflation is another key reason. When inflation rises, the purchasing power of money decreases. $100 today may buy less in the future if prices continue rising. Because gold has historically maintained its value over long periods, many investors see it as a way to protect their wealth from inflation. Interest rates also play an important role. When central banks signal that interest rates may fall, investors often become more interested in gold. Lower interest rates reduce the returns available from savings accounts and some fixed income investments, making gold a more attractive option despite not paying interest itself. Now, here's something many people don't realize. Technology is also increasing demand for gold. It's used in smartphones, computers, medical equipment, aerospace technology, and advanced electronics because of its excellent conductivity and resistance to corrosion. While investment demand receives most of the attention, industrial demand also supports the market. Financial experts remain divided on what happens next. Some believe gold could continue rising if geopolitical tensions remain high and inflation stays elevated. Others argue that if the global economy strengthens and interest rates remain higher for longer, gold prices could stabilize or even decline. Like every investment, gold carries risks as well as opportunities. For ordinary investors, experts generally recommend caution. Instead of making decisions based on fear or headlines, financial advisors often encourage diversification. Holding a balanced portfolio across different asset classes may reduce overall risk better than relying heavily on any single investment. Countries like India also play an important role in the global gold market. Gold has deep cultural significance, especially during weddings and festivals, making India one of the world's largest consumers of the precious metal. Changes in international prices often affect jewelry demand and domestic markets across the country. As investors continue watching inflation, central bank decisions, and global conflicts, gold is likely to remain in the spotlight. Whether prices continue climbing or experience short-term corrections, one thing is clear. In times of uncertainty, gold remains one of the world's most closely watched financial assets. And as global events continue to unfold, its next move could influence investors, businesses, and economies around the world. If you enjoy these daily global news updates and would like to support us, scan the UPI QR code on your screen. It helps us bring you fast and independent updates. Thank you.